So let me show you how I caught this trade and how I took this trade. This is the GBP, the cable, and this was on a Friday, the last day of trading. I don't usually trade Fridays, but this is a trade that just caught my eye. Then I decided to take the trade. So I already had a bias on the GBP that price was bearish, and for the last 3 months we had been bearish, and price was coming to take out these lows. Then with that in mind, I went straight to the 1 hour time frame. So I had to find an entry at that time, and this was 10 o'clock New York time. And in the New York session, by the way, this was the candle, or this was the price action at that time. This was not there by that time. So this candle, by the time I was watching price, it was right about this level. That's where it was. So then I asked myself, where would price go if it's going up at this time? Where is it heading to? I could see this high, which was eventually taken out, this high. Then above that high, this fair value gap, which price went to that fair value gap and beautifully rallied off from that fair value gap. So I could see this fair value gap and anticipated that price would come into this fair value gap, then rally off. Then from there I went to the lower time frame, the 15-minute, just to refine my entry at this time now. So on the 15-minute, we also had this fair value gap, which was there. And the other thing that also caught my eye was these highs, these equal highs, relatively equal highs. So as soon as I saw this, then I knew that this was a trap. Some might call it resistant level. Price resisted here, then when price comes here, it's gonna resist and drop down. But you can clearly see what price did. Price came and took these equal highs into the fair value gap and rally off. So as soon as I saw that, I knew that this was a trap. Price is coming to take out these highs. So my entry was gonna be in the fair value gap, because price would want to come and close in this fair value gap, then head to the downside. Then head to the downside to where? To this area here, to these lows, which is a liquidity pool down here. There are sell stops down here, and you could see, what is this? Just do that. Relatively equal lows, relative equal lows. So this is also a trap. This is also a trap. Then I knew price is gonna come down, take out these lows into the liquidity pool and do its thing. So as soon as I saw that, then my entry was on this fair value gap, just at the beginning of it, and my stop loss on this high, then targeting those lows. This is how I saw this trade, and it this is how I saw this trade, that the price will come here into the fair value gap, take out the buy stops above these equal highs, rally down into the liquidity pool, take out these lows. As you can see on this screenshot right here, that is exactly the trade that I took. And you can see price didn't like come down to that liquidity pool. Why? Because by the time it almost got there, it was that when the markets were closing, and by that time I just closed the positions that I had, because I knew it was almost closing time. Then I didn't have to wait until next week price to come there. I didn't have that patience, because this was just, it wasn't like a swing trade or anything that I needed to hold the positions to. So as soon as price came almost to that low, I closed the positions before the market closed, because I'd achieved almost like 95% of the trade, so there was no need to hold on to the trade. But I'm gonna show you a video of the trade, how it unfolded right after this. So enjoy the video. I wish you good luck and happy trading. See you next time. So at this time I closed all the positions as the trade had made its way about 95% of the trade, and the market was about to close, so there was no point to keep holding to the trades.